Hey everybody, it's Jeremy Ritz here, and just wanted to post another video here. Again, still getting a lot of questions coming in as I'm posting about real life trading here on Facebook. And I was having a conversation with someone the other day because I had mentioned how you can make money when the stock market goes down, which I know the first time I heard that concept, my mind was blown. But it's actually very real. You could do it. I do it all the time. Traders do it all the time. And it's called shorting a stock. So a lot of times people think that when a stock goes up, that's the only time you can make money. And when it goes down, the only thing you could do is lose money. But that's not true. And what shorting a stock means, it's you're actually borrowing shares from your broker, and your broker is the company that you're doing your trading through. So you're borrowing those shares, you're selling them at a high price, you're buying them back at a lower price, and then whatever that difference is, that's what you're pocketing as a profit. So I've been talking about Facebook because that's been a company that's been pretty profitable for me here recently with my trading. And I have the chart for Facebook. It's now called Meta, as we all know. But I'm just going to show you really quickly how this works. So if we look here on the chart, we could see that the price of Meta, let's just take this candle right here. We have a hammer candle up top here. It hits a price of $116.78. So based on how you're setting up your trade, where you're going to enter, and if you're perfect, you would have to be perfect to enter here. But if you read your indicators and you know where to get in, and again, that's where real life trading can come in to help you find those spots to enter trades using the 10 EMA strategy or finding a double top or a double bottom. But anyway, let's say that you shorted 100 shares of Meta at 116.78. And again, this is just hypothetical. I'm giving you an example here. And let's say that your trading plan and the way you set up this trade, you plan for the stock to drop to 114.53. Okay. And just pull up my calculator here so I can have some accurate math. Let's say that it falls, and you see that it did fall there, 114.54. So that's a $2.24 drop from 116.78 to 114.53. So what you would have done in your broker is set it up so whenever the price hit 114.53, it was automatically sold. And see, those are the things that you could do with trading. And you could do that on the opposite end too. You could set your what's known as a stop loss. So let's say you wanted to lose less than what your profit would be. Let's say based on your trading plan and what your setup would be, you would set a stop loss of 117.50. So then you can automate that so that if the candlestick hits that price, or if this price point is hit, it exits you from the trade for a smaller loss. Okay. You could do all those things. You can control your risks. But anyway, so let's say that you bought 100 shares. Excuse me. You sold short 100 shares of Meta at 116.78. It went down to 114.53. You buy back those shares. That's a $2.24 profit. Now, let's say that you sold short 100 shares. Well, you just made yourself $224. And if you increase the number of shares that you're working with, so let's say it was 500, $1,120, and on and on and on. So you could see how this works. The larger your share size, your position that you're working with, the more money that you can make. You don't need to do that right away, but think about how $224 just once a week could benefit your financial situation. So anyway, this is called shorting a stock. What it means, borrow shares from your broker that you're going to sell, you're going to buy back at a lower price, you're going to pocket the profit. You can make money in a down market. It's available to you. And learn more about shorting stocks at Real Life Trading. If you have any questions for me, throw them my way and be more than happy to talk to you about it. Anyways, have a phenomenal day, and thanks for watching this video.